Hey, YouTube fam, this is your boy Nick, aka Big Tuna here. Let's do some trading. Also, my IG is HOUTX underscore traders. Let's go, UTX traders. So we're gonna break down the US30 trade we took today, right at, I'm Central Time, so a little bit before the news drop. News drops at 8:30 Eastern. We're starting to look for trade just before news, about 7:20 is usually where I like to start trading. I like to be in the trades before the news drops. So if we get a good push on news open, we're already there, we're already going, and boom, we use the news go with it. So let me share my screen real quick. Okay, so this is US30 as of today, as of this morning. But if we rewind this a bit, we'll look at US30. Let's say at 6 o'clock this morning. Okay, so we come back at 6 o'clock this morning. This is what the chart looked like, and this is what I see this morning. So what do I see in the morning time? I see liquidity. I see these wicks, and I see this double top. I see that market is currently taking out this double top. Okay, so I like to trade with my Fibonacci's. You guys want to see what some Fibonacci's are? You want to make a video on Fibonacci's? Leave some comments down below. We'll do some Fibonacci trade. So this is what my Fibonacci's look like, and this is the Fibonacci zone that I like to sell in. Okay, so I usually mark that as my sell zone. So for me and my rules, to be able to take a sell, I need to see that liquidity has been taken out. Okay, I see a little trend line here. So what I mean by liquidity is that there is sell orders pushing the market down. There are more sell orders pushing the market down and more sell orders pushing the market down. So that's three different places that the market has had lots of sell orders. There's lots of orders there to push that down, and that's what it did. The market will need to want to come back up and hit these sell orders, and either those people will get knocked out at break even, or perhaps you'll see here, these are buys, these are buys, these are buys, these are people buying, and these people who left these candles here are now caught in a drawdown, because when this broke, they're in drawdown. So they will be taking trades they're going to insert money into the market to push the market back up so they can get out of these losing positions. Okay, so this is our area of interest. This is the top. This is already set now a double top, and that's a target for us. Okay, that is our liquidity pool that we want to get seen taken. Now, if we think the market's going to push up to take out this liquidity, where does it need to go on the other side? So my goal down here is then now these bottoms, these wicks. So this morning, at this time, we're looking for sales in this area. But we're on the 1 hour chart now. I'm going to go down a little bit, let's say the 15-minute, and we can start. I'm going to play this 15 minutes at a time. Okay. So what are we seeing? Actually, I don't know why the RSI is not on here. Normally, I guess because we're replaying, we have the RSI on here. We are seeing that the market is starting to become divergent. Okay, so let's fast forward this a few more minutes. So now the market is pushing. It's now 6:30 in the morning Eastern time, so we still got some ways to go. So here I come. Okay, now again, I'm in Central Time. But this is now 7 o'clock Central Time for me, which is 8 o'clock East Coast time. This is when I start looking for trades. So there it is. There's our sell zone. The price has cleared liquidity. Excuse me there. The price has cleared all of this liquidity. And now we have this gigantic, you call it fair value gap, you can call it a wick, you can call it whatever. If you change time zones, that's one gigantic wick. So what I like to do sometimes is I'll mark this off from the top of the wick to where the market has already came back. Okay, and then I'll draw this line from there to there. This line right in the middle is 50%. So now I know where 50% of that wick area is. Okay, so when I was on the live call this morning with my team, I'm like, yo, we need to start looking for sales here. Okay, we see a little rejection. And right there, when we saw the double rejection, we took trades. Okay, it's 8:30, which is 7:30 my time. Actually, I think I'm a little bit late on this replay. We just took a sell right before that, right there. Okay, so initially, our stop loss is always at 10% of the overall fib or whatever fib we're in. I set the stop loss always at 10%. This gives me some room to breathe. Maybe the market wants to come back up here, double tap this. I put a cheese mark, but double tap that liquidity before it sells off, you know. And then our initial TP would be down here, right? Really right there. Because my initial TP, you could think of TP in different ways, but for me, I'd like to see this clear these lows, but I also see that this is a big consolidation. Okay, knowing that this is a big consolidation, what then I will then do is mark off this consolidation. Okay, and now for me, the market broke this consolidation and never came back. It shot off. So in my opinion, this market needs to come down, relieve these people, because right there is sell candles. Okay, right here is sell candles. There are people who are playing this double top, triple top, and they're selling right here. That's why there are candles right there. Okay, so our play is to come down here, tap the top of this consolidation area, and that'll be our TP1. Our TP2 then would be the same thing, come down here and maybe even clear out that, the bottom there. So let me scroll in a little bit so you can see a little better. There's the sell candles, there are the sell candles, okay? So we're in trades now. Our TP1 is about where I have it there, give or take, okay? And just for reference, we're on the 15-minute time zone. That is 211 pips. Not 200 pips. Pretty good. Okay, we're in sales. So let's go. Fast forward. Bam, bam, bam. Right into our TP area. Okay, now as traders, so we're going to call that a successful trade. As traders, we need to figure out then if we're selling, where the buyer is going to step back in. That's where we need to take TP. So I told you there's this consolidation block where sellers were stuck. They shorted here and it popped off. That's our TP1. People could be, and I called it out on the live Discord, could be buying up from here, okay? And we protected, obviously, that many pips in profit, and we took profit off of this, and we left what I call a runner. So I took 2/3 of my profit. I left a little bit. I left 1/3 going in case this wants to melt all the way down. We'll let that go. So what happens? A little bit lower, and then pop back off. Okay, it rejected. It did not engulf. No, it did not engulf. It will come down to 5 minutes. Did not engulf. Came back down, and then took back off. You can see here. We'll go. It came all the way back out. Retraced, and boom, knocked us out. Break even right there. Okay. So that was today's trade. That was today's trade. 200 pips, clean. It did not do exactly what we wanted, but it's a good trade. We took 200 pips. We had an entry. We lined up our entry with the fibs. We lined up the entry with the gigantic fair value gap off the break. Okay, so let's get out of the replay mode. I think actually we are already out of the replay mode. Okay, so there we go. Let's exit that. Okay, so, and as you can see, it popped off. Okay, it came all the way off. And that's okay because we protected. Okay, so let's review real quick on why we took the trade, how the strategy worked for us today. It might have not have caught the hugest trade, right? This has been a bull push here. We caught a nice counter trade. So let's think about that. Okay, one, we have the fair value gap on that gigantic wick down. So I'm going to delete that. We already know that. We drew a fib from top to bottom. We had the 88.6, 78.6 zone. That is my sell zone. That is where sellers are going to start to step in. Okay. The number one rule of this strategy is make sure that liquidity is below you in this situation. Let the market take out liquidity, then find a reason to sell. Okay. Again, I don't know why the RSI is not on here. Let me see if I can add that real quick, because that is supposed to be on there. Relative strength index. Okay, so we've got two now. I must have accidentally, there we go. So anyways, when I took that trade, we're on the 30-minute now. This is our entry, and as you can see, we're oversold on the RSI. And like I was talking, we can come down here a little bit lower, right? This is where we took the trade. That is a strong, strong oversold. And off of that alone, plus our fib zone, plus the 50% of that engulfing, the 50% of that fair value gap, if you will. I don't know if it's technically a fair value gap. It's not really a fair value gap, but you had this gigantic wick top to bottom. I just 50% of that. Okay, so there's three different, okay, oversold, sell zone, 50% of the wick. There was liquidity below, they got taken. So now we're up to 4 different reasons why the market could have turned around. Let's see if we can't stack a few more. So when you hear your people, your gurus or your traders talk stacking confirmations, this is what they're talking about. Now we draw a fib, okay, on this push up right there. The TP area for this fib is the 27. That's your TP1. I'll put a mark right here on it, okay? So for these people who bought up right there initially, they're going to be taking the profit at that TP1, okay? So now what? This TP for those have been hit. And look what the market does. It doesn't reject it perfectly, but it gives us a nice doji candle, falling star indecision candle, also letting us know that this is going to turn around, okay? It's losing its steam, right? And that's exactly what it did as it sold off. So let's delete all this. We'll clear up this sum. So now we have 5 confirmations, right? We have the push on the TP, okay? Now, why do we think the buyer stepped in where they did? Okay, well, you had this push. Okay, we'll delete this here. Let's delete this. Let's delete this. Let's delete this. Okay. If you look on the 30-minute, I mean the 1 hour candle, look at these push pin candles. It came down, it hit our block and rejected off. A new candle came down, hit our block again, retested, and then pushed off. Okay, why did it push off? Well, we know that there's liquidity below, and it did not have enough power to get down there. Here's liquidity here on these double tops. So this order block, in reality, was enough pressure to push this up. In my opinion, there's a lot of people in banks that had pending orders, pending sales right here, because they're playing that Fibonacci that I just already showed you. Okay, that's why we had a reaction. But there's not enough sales. There's not enough pressure in the market to break that order block that led to this gigantic engulfing, this gigantic move here. Okay, so we fib that top to bottom. We see the 20, that's the TP1 got hit, TP2 got smashed as well. The second move was from here to there. The second leg of this push was from bottom of the consolidation move. It popped off. There's a top, then it retraced. Okay, we had a good retracement of the 78.6. So because I had already hit the market on this sell for 200 pips, I'm not looking for any more trades. I'm good. Take my money and run. Okay. If I wouldn't have hit that, I would have been looking for buys. You had the push up. You had a solid rejection of the 78.6. It even gave you a retest if you missed it the first time. And then we had the push off. I like to trade what's called the Elliott wave, the 3-leg push. Okay, and this is a pretty good example. Not the best example, but pretty good. You had your first push, you had consolidation, you had your second push, retracement, and now you have your third push. Okay, there's your 3-leg ABCD pattern. Now what? Now on this second leg, I love to measure the second leg, which is this one right here. I'll mark it back for you guys. I love to measure the second leg, top to bottom. There's a good retracement. Where is a TP? The lower it retraces, this one gave us all the way to 78.6, the higher the TP is. If this is a shallow retracement, like this one here, it might not reach the full extension. With a deeper retracement, it's gathering more orders to give it the extra power. And that's exactly what it did. If you'll see it wicked above, closed. Wick barely wicked above, closed, gave us a bear candle. Now it's, at the end of the day, gave us that last doji. So I fully expect that this could turn around tomorrow. That doesn't mean that I'm automatically taking a trade or market open tomorrow, but I mean, look, oversold, oversold. We're not quite divergent because this second oversold RSI is not lower. Okay, so we're gonna have to wait a little bit. Maybe the Asian session and the London session coming into Monday. Today's the 19th of January 24. So 19th, 20, going into the 22nd. Maybe then we will have some more, some of this, and we can look to find an entry and a pop off buy, or we can do one of these where it pushes down, closes below this area. We can measure a pullback and then take one of these number trades, right? And then again, our target would be probably TP1. There's a fair value gap. It'd be right in this area for like a scalp, but we don't know yet because it's not that time. It's just, we're just thinking ahead. So there is basically a pretty good idea of the strategy that I like to trade. And I'll be making videos and showing you this strategy over and over again. But the main crux of the strategy is find where liquidity is, find a fib zone, or find some other reasons, some other structure, like this, for example, that gives you a reason to believe the market is going to turn around in a particular area. You got to find the area where you think market's going to turn around. Okay, so not only do you use the sell fibs going down, but you can also start to build buy fibs on the way up. So for this, like I said, this was here. We're going to mark our TP, which is there. You'll notice that the fib and that TP line up right there. We're starting to see like, hey, maybe this is going to turn around. Look what happened. It wicked into the area, wicked above the area, closed right back into it. You could have taken that trade right there as the candle closed, giving you a doji, falling star, whatever you want to call it. Not really a doji, you want a falling star, giving you confirmation that this is going to be the area right there, and then you could have sold there. You didn't have to catch a super sniper wick entry, okay? But that's it. You want to stack fibs on top of each other. You want to look for structure. You want to make sure that liquidity got taken out, which is right there. That got taken out, gone. And then we saw a reaction for 200 pips. I was hoping it would go all the way down, but it didn't. But we took 200 pips, we booked it, call it a day. The runner got knocked out, stopped at break even. So there's day one, Friday. There's a successful trade. I'm not going to go over the NAS trade. We did take a NAS trade today. It broke even, and we looked at gold and called out a gold trade at the exact same time. But we're already in the NAS, we're already in US30, so we didn't want to overextend ourselves and go 3 for 3. But the NAS, the gold trade we did pull out, or I did pull out, actually hit as well. So this is the main part of the strategy. I will be going over my strategy in more details, as well as other types of strategy, because the goal is to give you so many different nuggets of so many different types of strategies that you can compile all of those and make your own strategy. Okay, so thanks for stopping. Please give me a like. If you like this, please give comments, because as you know, it helps the algorithm. We're trying to build a YouTube channel, we're trying to do here. Okay, so this is US30. Let's do it. Y'all have a good night.